Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn Associates with your metals market update, and this is for Wednesday, the 6th of February, 2019, about 3:37 p.m. Central Standard Time. You know, as I'm saying the time, and I do this, and I do it out of memory. In our studio, I don't have clocks up that give me the time or the dates. It's not that it's Spartan here. It's certainly not. Just don't need it. What I was noticing last night as I left the building, it's about 5:15, 5:30 at night, it was still light outside in Chicago. I mean, that's a ray of hope, right? Okay. So what you've had is the dollar taking off to the upside at the expense of a number of currencies, which is finally weighing on the silver and the gold markets. You can see that, it's clear as can be, and you see it on the chart action. The copper markets kept a relatively good bid along with the palladium market. Palladium has its own shortfalls because of where it comes from, which is Russia, South America, South Africa. Copper's different. The copper play is all about, can the president get anything done with China? But as you're weighing on the market, the gold market, which has had a phenomenal rally since last summer, the market's getting a little bit of a pullback right here. And as we look at the action, you can see how the market is breaking down on the daily chart. The weekly chart, and this is only of closes, still looks solid as can be. This market seems to be pulling back, and if I put the swing line on, you can see that you've got a pattern of lower highs, lower lows. That is bearish. I filter that out by always looking to see where are the key moving averages. And the big key moving average to me is the 18-day moving average of closes, which I've labeled as the 18 MAC. And I always look to see where the 100-day is. You're well over the 100, so I think the long-term bulls feel very comfortable with the market. Short-term, if the market continues to break, I call this line the line in the sand. It's often from the 18-day average that events happen, and I use that as a filter. The filter being, if the market is over that number, it becomes a magnet where it might want to go back to it. The second thing is because prices are closing over that number, I say the bias is up. So I have a trend down. That gets negated if you take out 1321, but it does not turn the trend up because you've got a lower low. The best you can hope for is a higher high and a lower low. And you'll hear traders talk about higher highs, lower lows all the time. You need not pay attention to them if you don't like the idea of trending. That's up to you. I am a chartist. You're going to hear chartists on, be it CNBC when they have their chart words, Bloomberg. As they come in and they bring up the charts, you're going to hear that term a lot. So as you look at it, logical support to me around the 1305 area. When I look at the Bollinger Bands, the idea of a Bollinger Band is several. Number one, it offers theoretical resistance as a top band and support as a bottom band. Number two, a market will trade within it 95% of the time. Number three, you look to see is the market hugging that band up or down and what's it doing. 95% of the time, the market is going to trade within the bands. So when you get successive closes like you had here over it, it's often a sign the market is going to correct afterwards and pull back. And if you're looking to get long, maybe you can do it better than that number. That's the theory that I have. It is not a go short against that band to get out cheaper. Absolutely not. I can show you instance upon instance where you get your head turned off because of that. Spun around, come off. No, that's not what you do with it. It might mean that instead of buying here, maybe you get a chance. Does it always work? Nothing always works. But I don't like Bollinger Band buying. I also pay attention to what is momentum telling you because more times than not, in my career at least, I have discovered that momentum indicators turn before the price turns. And in this case, we've been overbought. Momentum is turning down with price. It stayed overbought for a couple of days as the market was just hanging here, right here. But now it's turned down. So I think the odds are good that the market might want to return to that 18-day average. And it's from there that I look to see can the market get its footing under it. In the GLD, the popular gold ETF, I realize people are rushing into these, and I realize gold's been a heck of a performer since December. First one to tell you that. But this is a little rich in price. And we've had a pattern here now with today's action. We have with today. This was yesterday. Now I can say lower highs, lower lows. Similar to the future, I can say momentum has turned down. It was overbought, and I'm still looking for that 18-day average to see what happens there. GDX is the strongest part of this complex, and it has not lost its embedded reading. So this is the strong part. And what I'd expect to see are on pullbacks. The trade is still buying this until it loses that red line under 80. If that occurs, I would have every reason to expect that price and the 18-day average try to make a run. Until that happens, I expect to see the support in the market hold up. In the gold-silver ratio, as we bottomed out here, the first zone was, would you get back to that line in the sand, which you did yesterday. Now the market is following through, so that tells you silver is weaker than gold. So when we go to the silver chart, one of the things you look at, take a look. And what did silver do? It's right back trading at the 18-day average of closes. Could it work lower? Why not? You have the lower highs, lower lows. The settlement's probably going to be right on that number. If it continues down, could go to the 15-25 area. What I'm really expecting is if the market's any good, it starts spinning around this 18-day average for a bit and regroups. That would be the more likely thing that I'm expecting. Doesn't mean I'm right. If you go short, what's the risk in being short? Another good question. The last high was 1593 on the swing line. So anyone that goes short under this 18-day average, I would range the risk to that to keep the trend down, that number. But any close back over the 18-day average puts you in problem zone. Not an ideal chart setup for the bears. That's my point. The copper is still very bullish. The market has the embedded reading. The market is running the upper Bollinger Band. The resistance area of the Bollinger Band, the market fell back, challenged the 100-day average, and maneuvered itself back up again. I think we will look back unless the Chinese-U.S. trade talks fail and say that the market got itself very cheap in the 258 area and that the prices, if that deal can go ahead in some manner, will be better. Do I think that the U.S. and China will make a deal when the president meets with President Xi? I don't. I think there'll be enough headway to extend into more talks, which the market might also like. That'd be a good sign. The worst thing you could have is a short conversation between the two. The president leaves, says we're not making any headway, and all of a sudden the trade war is back on in full steam because he's talking of raising tariffs and so again. Don't make assumptions. You know, have ideas, but that's about it. No, have your game plan. Platinum turned bearish. Lower highs, lower lows, close under the 18-day average. It has put in play a possibility of challenging this lower Bollinger Band. Again, if one sells in this area, you've got to consider the last rally high up here, which was this high at 1827.40. So any sale here is going to put you, did I say 18? It's not 8, it can't be. It's 827.40. I knew something was wrong there. So the risk would be from 808 all the way up about $20. That's a $1,000 risk. You'd have to decide if you wanted. However, regardless of whether you like it or not, the trend is down. Resistance at the 100-day average has shown up, and the market's got downside bias. Where the strongest market continues to be is the palladium. It continues to stay, just take a look, over that 18-day average of closes, hit your upper Bollinger Band and backs off, but momentum is up, bias is up, trend is up. This is still where I see the powerhouse, and the dollar, of course, isn't weighing on that market or the copper very much. It's been weighing on platinum, it's been weighing on silver and gold. And look at how this dollar has moved from a big pattern. You know, just days ago, this market was at 94.87, and we're only in February. I've heard so many people say the play of the year is short the dollar, you know, one person after the other. Well, so far, they're not doing too good because the market, this was where we began the year, and you're at the highs of the year, not the lows of the year. Just something you got to point out. And that's what I try to do. You know, in these videos that you're looking at right now, I can only do so much. I talk momentum and so on. In my subscriber video in the morning, I can say I want you to buy here, I want you to sell there, put a stop here, take your profit at this number. This is how the charts in that video look, and I am not in them. All my charts on my screen will look the same, and I will explain each of these studies as you've got them. The idea that I try to come up with is to throw ideas about trading at you. I am not trying to establish a track record. That's not what it's about. It's about you having the ability to talk to a pro like me, if you will. You can, by the way, when I say talk, remember I hold webinars as well. I'll probably have one next week. But you can see how this is working itself out. I cover all of these markets the same way each and every time. And that means I start off with the 4 stock indices, I go to the VIX, then the currency markets, all the major currencies, interest rates, and so on. So let's assume that you're just an energy trader. You don't care about the rest. You just grab on the bottom, it's a video, move to the back, you'll see about where it comes in, drop it, it's going to start, and away you go. I know some of you don't like the disclaimer at the beginning. We're working on that, trying to get the government to let us make it a bit smaller. Can't help it. It's the way that it runs. It's just the way it is. I am a licensed broker. If they say jump, my question is how high? In looking at chart action, I'll give you these ideas about the market. I'm going to talk technicals. I'm going to talk reports. If we're talking grains, it's going to be a report there. If we're talking gold, reports that are affecting it. What's going on with Venezuela's gold, blah, blah, blah. You're going to hear me talk about all these different things. The cost? $7.95 for the first 30 days. It's about 22 business days. I put one out Monday through Fridays. Pretty simple. After that, it's $15 for those days. But I throw in our mobile application. So whether you have a Google or a smartphone, that's normally $40 a month, free. Away you go. You're going to get chart action and so on. Some of you want live quotes. Well, you got to pay the exchange, I think $5 or so for the live quote with it, and away you go with that. Otherwise, they're 10-minute delayed or so. How do you get all this? Give us a call. And by the way, when I put out the video, you'll get a push notification, not a text anymore, a push on your phone. It'll say the video's ready. You just click it. It'll open up the app, and you're listening and watching everything you need. So you can either call us, you can go to our website, and under Research or Education, you'll see Morning Subscriber video. Click on it. You're in business. You can click up here to get to our page as well. I'm Ira Epstein. You have a good day.